As Malaysia gears up for a significant shift in its tax landscape, businesses and consumers need to prepare for the expanded sales and service tax SST set to take effect on 1 July 2025, announced in Budget 2025 on 18 October 2024. This expansion marks a pivotal move to strengthen Malaysia's fiscal framework under the MADANI Government, ensuring sustainable revenue to fund essential public services. With new goods and services now taxable, the changes will impact businesses in their pricing, compliance and operations across multiple sectors. And talking about the SST expansion and revision, I'll welcome you. Our guest ready on the set is Harvey Dinsey, the Council Member, Chartered Tax Institute of Malaysia. I want to say thank you very much, Harvey, for joining me. Especially since the announcement, we have been covering this exclusively to understand from a consumer and even from the business perspective. Firstly, talking about the revision and the expansion of SST, how do you see this as an important step to strengthen countries' fiscal resilience and even achieving the fiscal deficit target?
Thank you. Firstly, Nina, it's a pleasure to be here.
Thank you.
Thank you so much for the invitation. Well, essentially, the idea is to strengthen the country's fiscal position by having increased revenues as well as widening the tax base. And this is important to improve the creditworthiness of the country, to boost the investor confidence, which is important for long-term sustainability, of course. And there is a need, obviously, to do the debt management with increased revenues. That will be a lot more achievable. And it is the commitment of the country, of the government, to basically reduce the deficit as well. So all these are geared towards that. And when you talk about SST, you can't escape the comparison of the discussion with GST. And fundamentally, for GST, basically all services are subject to the tax, GST. But you've got things like zero-rated and exempt services as well. Whereas SST is based on a prescribed list. So it's not covering everything, all and sundry at the moment. And the idea is to get from this currently with this expansion, we've seen the list of taxable items growing from about 1,000 to 4,000 subcodes. And the exempted items have been reduced by about 70%. So the idea is actually to widen the scope, to bridge the gap in terms of what GST collections could have been and what we are currently able to achieve under SST. So that's the main driver for this need to have this expanded scope of services for SST.
This is some of the impact that probably the people could not feel it yet, but we know there's a benefit for the country and ultimately will go back to the people.
Yes.
And can the targeted approach help mitigate the potential impact on inflation or even consumer spending in the future? What are some of the things that probably that businesses or consumer felt like, oh, probably this is the things that I have to comply, but this is not things I expected for the effect?
Yeah. Well, actually, the targeted approach is meant to try to cushion the impact of the expansion of SST on the cost of goods, etc. And so the idea is it is targeted because basic items, essential items are not being imposed with SST. And as you go into premium and discretionary goods, it is at 10%. So if you talk about racing bicycle, which can cost up to about 100,000, I've been told, right, it's at 10%. So the idea is targeted. However, basically when it comes to the feeling of the businesses out there, I think the impression or the feeling is that there would be an increased cost of doing business, an increase in the cost of goods as well, because ultimately the prices will have to be, eventually it's going to cost more to engage service providers, and then you're going to pass on that cost to the consumers as well. I think there is also, at this point in time, it's still a bit early. There's a lot of misconception about some of the types of items that are subject to sales tax, for example. I think there was this bit of issue on local fruits being subject to sales tax as well. I think there's a misconception there. I think that's been clarified. Essentially, it is on certain imported fruits, mangoes, apples, mandarin oranges. And again, these are not exactly premium items, right? These are normal, common foods that are typically taken by, consumed by most people.
Yeah.
So the government, I think a couple of days ago in the papers, they've also said that, okay, we will do a review and see whether there's a need for us to amend this list of items that are subject to SST. So it's an ongoing thing. And I think the government is basically looking at wanting to appease, right, most parties. But there is a need actually to expand the scope of SST. I think the expected increased collections with this expanded SST is at about 10 billion ringgit for the current year. If I recall correctly, I think the collections that came in last year for SST were about 47 or 50 billion. So we're talking about 60 billion or so currently, the expectation with this expansion.
Okay.
With GST, some of the figures that I've heard being passed around or discussed is in the region of about 80 billion. And so there is a bit of a gap there that needs to be managed. So there is a need. And I think the Prime Minister also in recent interviews said that we have to obviously collect money in order to be able to provide, for the various expenditure requirements of the country.
Correct, especially taking what happened in the global context right now.
Yes.
Probably we need to take a look more on the fiscal position. In your view, does the SST have the potential to remain as a progressive and equitable tax while ensuring sustainable revenue for the country?
Yeah, so if you talk about equitable or progressive tax, the idea is that those that are not so well to do don't have to pay so much, whereas you collect from the orang mahakaya or some of the better people in a better position. And that's the idea of currently the way it has been approached by the government, where they've done a study, because SST is actually applied as a single stage tax. And it has the effect of tax on tax, cascading effect at every stage of the supply chain. So with that, basically, ultimately, the cost of that item can become a lot higher. And GST is actually doesn't have that kind of inefficiency. So that's a concern.
Okay.
And this effects of the cascading tax on tax will be passed on to the consumers. And essentially, the prices may not be so transparent. And this can disproportionately affect the lower income taxpayers. And that is the issue that the government is trying to manage. And they've had MOF has had a lot of discussions with the industry players, with various parties, with the professional bodies, with our council as well, on how to manage this. So they've tweaked this with, for example, if we talk about rental income, right, commercial properties, rental income is subject to service tax now. Only the landlord, the main landlord will charge to the tenant, the main tenant. When the main tenant charges to parties that are subtenants, there will be no imposition of service tax now. So it's not going to be cascading in that perspective. This is to manage the issues that have been there all this while with the imposition of service tax. There was a big issue last year when this was introduced for the logistic services. And there was a lot of furore, a lot of adverse feedback on that. So learning from that, MOF has basically had a lot of discussions. So the idea is to try to manage, right? GST is not something that's being looked at the moment. The Prime Minister has mentioned it again, reiterated, that if at all, it will only be imposed once the economy is a lot more robust. We are, I think, chugging along quite nicely, but we are not quite there yet. That's the message. And also, the minimum wage needs to reach 4,000 ringgit. Currently, last year there was an increase from 1,005 to 1,007. That itself caused a lot of grief to many parties. So when we will achieve that 4,000 minimum wage is,
only there we can consider to implement the GST.
That is when that happens and if that happens. That's the message at the moment. So currently, the idea is to look at SST and try to manage it as best as possible. So whether it's equitable or not, it depends on how it is implemented.
Okay.
And that's the approach, that's the initiative from the government to try to make it as equitable as possible, which is why if we talk about essential items, 0%, discretionary premium items, it's a 10%. So it's progressive in that sense, but there are certain inefficiencies that need to be managed.
Help me understand also on this. Probably some may say that nobody wants tax, but we know it's how we implemented it. Maybe some say, oh, GXC was much more clearer because we know it was direct to the consumer, but some may say that, oh, SST, the review and the expansion of SST, we don't know if it's considered under value-added tax, VAT. Is it going to be straight to the consumer or is it going to be to the exporter, and then ultimately exporter will decide to go to consumer? Help us understand within the SST, is it a direct to consumer or is it a VAT? How do we consider all of this?
Well, actually, ultimately, these taxes essentially are to be borne by the consumers.
Okay.
It's just the issue of how along the supply chain, how it is managed.
All right.
So with SST, as I mentioned, the cascading effect makes it ultimately a lot more expensive.
Okay.
The GST, you have the input credits, right? So the incremental rise in the cost should be a lot more manageable compared to SST. That's essentially the issue, and it's a lot more efficient. GST plus, you'll be imposing it on all and sundry. Everybody plays their part in the payment of taxes. But because it affects everybody, that's where the concern of the government is that we don't want to overly burden, especially the lower income group.
Yeah, that is very important. We don't want to add more burden to the lower income and the vulnerable group, especially. What do you see as the main challenge in implementing the new tax regime?
I think if you talk about companies, 90% of Malaysian companies are SMEs. And with SMEs, it's always the issue of resources and time constraints and making sure that your business is running well. It's operational issues that, essentially come into the picture. So they may lack the systems or the expertise or resources. And even if you do, put in those systems to correctly classify, to quantify, and to submit your SST returns correctly, it's a bit of a challenge. It requires effort. It will increase the cost of compliance. If you need to seek professional advice, there would be SST on some of these areas where in the past there was no SST. I think also the deadline that is given July 1st of July, for the imposition of SST on these expended items seems to be very tight for most parties. Of course, if you are providing these services, taxable services, just commencing to start supplying the services or those areas, then service tax will only start in September, so you still have time. Having said that, and understanding that yes, there is a bit of a tightness in the deadlines, the government is also saying that if you act in good faith and you try your best to impose and to implement the SST accordingly, they will waive the penalties, right, until 31st of December. So for this interim period, for the introduction of this expanded scope of SST, there is supposed to be no penalty, but the taxpayer has to show that they've acted in good faith. From that perspective.
Havinder, probably my last question. We did execute GST previously, and we don't have the GST, meaning that probably it was a failure. But we know that even though GST and SST, their main objective is to increase revenue, is to bring more, to improve credit worthiness of the country, as you mentioned, and for long-term sustainability and widen the scope. It's a different structure between SST and GST, but what can we learn from GST when we implement it previously? This is what we should do, or so this is the things that we should structure when we want to execute any other types of tax.
Well, I think I wouldn't say that GST was a failure. I think most businesses are actually requesting for GST to be reintroduced, right? And I think the reason why it switched was mainly because of the fact that it affects every individual, the consumers, everybody is affected, except in situations where the items in questions or the services in question are zero rated or tax exempt, which is a list of items, etc. So, but otherwise everybody is affected. So the idea behind GST, I think, was seen as being good. We have to increase the streams of revenue collection to rely on direct taxes alone on a continuous basis. To rely on Petronas subsidies, it's going to be an issue in the coming, going forward. So GST is or was seen as the good consumption tax to impose, but due to various factors, it was discontinued, and we went back to SST. I think what could perhaps be done with GST, or could have been done, is the rate could have been a little bit lower to start off, and then introduced, maybe gradually increase the rates in future.
All right. Thank you so much, Hafinuddin Said, the Council Member, Chartered Tax Institute of Malaysia. I'm sorry we're at the end of the session, but this is a very insight. I hope we can talk more in the future. Again, thank you very much. And definitely all of our discussion here will be featured in AstroAwani.com across all social media platforms. And we're going to continue with World Economic Forum's top stories of the week.